If you've been thinking about starting to invest, but something keeps stopping you, I want to talk to you specifically today. Because the question I get asked more than almost any other is this: is now a good time to start investing? And I get why people ask it. You open the news and markets are always volatile. Interest rates are always shifting. There's always some geopolitical event, or some economic uncertainty, or some analyst predicting a correction is coming. It genuinely feels like there's always a reason to wait. So I'm going to give you a straight answer today. Not a hedge, not a it depends, a real honest answer, backed by over 100 years of market data. And by the end of this video, I think you'll see the question itself very differently. Before that, just a quick note before we continue. I'm not a financial advisor. This content is for educational purposes. It's not financial advice. Always do your own research or speak to a qualified professional before making investment decisions. Here is something that might surprise you. People have been asking whether now is a good time to invest for as long as stock markets have existed. In 1929, just before the Great Crash, people were asking it. In 1987, after Black Monday, people were asking it. In 2000, during the dot-com bubble, people were asking about it. In 2008, during the financial crisis, people were again asking about it. And in March 2020, when markets fell 30% in a month, people were asking about it. And you know what all those moments had in common? Every single one of them, in hindsight, turned out to be a good time to invest. The people who waited for certainty waited through recoveries they never participated in. The people who invested despite the uncertainty are significantly wealthier today because of it. The question has never really been about timing. It's always been about fear. Let me show you something concrete. Researchers have studied what would have happened if you invested a lump sum at the absolute worst possible time, literally the day before a major crash, every single decade since 1970. Invested just before the 1973 oil crisis crash, or invested just before Black Monday in 1987, invested just before the dot-com bust in 2000, or invested just before the 2008 financial crisis. In every single case, if you left that investment in place and did nothing, you came out ahead. Not slightly ahead, significantly ahead. The worst market timer in history, who invested every lump sum at the absolute peak before every crash, still made money. Because timing the market, even with terrible timing, beats staying out of the market. Now compare that to someone who kept their money in cash, waiting for the right moment. Inflation eroded their purchasing power year after year. They never got back in because there was always another reason to wait. The risk of investing at the wrong time is real, but the risk of never investing at all is far greater and far more certain. Here is something I find genuinely fascinating about market psychology. If you look back at stock market chart from the last 50 years, you see a line that broadly goes up and to the right. Yes, it has dips. Yes, it has crashes, but broadly, undeniably, upward. Now imagine you could go back to any point on that chart and stand there in real time. You're standing at 2003. The dot-com crash has just happened. The news is terrible. Uncertainty is everywhere. Does it feel like a good time to invest? Absolutely not. You're standing at 2010. The financial crisis has just devastated markets. Unemployment is very high. Banks nearly failed. Does it feel like a good time to invest? Absolutely not. Again, you're standing at April 2020. A global pandemic has just shut down the entire world economy. Does that feel like a good time to invest? Of course not. But in all three cases, anyone who invested at that exact moment of maximum fear went on to see extraordinary returns in the years that followed. Markets always feel scary in the present. They always look obvious in hindsight. That gap between how scary now feels and how obvious later looks is where most people's wealth is lost. Not to bad investments, to hesitation. I want to address the objection I know some of you are sitting with. What if markets are genuinely overvalued right now? What if a correction really is coming? That's a fair question, and I'll give you a fair answer. First, nobody knows. Not the analysts, not the fund managers, not the economists on television. If anyone could reliably predict market corrections, they would be the wealthiest person alive. Nobody is. Second, even if correction does happen, the question is not whether markets fall. The question is whether markets recover. And the answer to that, based on every piece of data we have from the last century, is yes, they always have. Third, there is strategy specifically designed for exactly this uncertainty. Instead of investing a lump sum, which feels terrifying if you're worried about timing, you invest a fixed amount every single month. When markets fall, your monthly amount buys more units at a lower price. When markets rise, your monthly amount buys fewer units, but your existing holdings increase in value. You never need to know where the market is going. You never need to time anything. You just invest consistently, month after month, regardless of what the headlines say. That strategy, investing a fixed amount each month, removes the timing question entirely, because you are not betting on where the market goes next. You are betting on where it goes over the next 20 or 30 years. And that, based on everything we know, is a very different and much more reliable bet. I want to make this as concrete as possible. Let's say you've been thinking about investing for the last 2 years but haven't started yet. Maybe you were waiting for a better time. Maybe markets felt too high. Maybe life got in the way. If you had invested £300 a month for those 2 years, that's £7,200 of your own money. And an 8% annual return, that would now be worth approximately £7,800. A modest but real gain on top of your contributions. But here's the number that matters more. That £7,200 invested today and left for 25 years at the same 8% return would be worth approximately £49,000. Those 2 years of waiting did not just cost you the returns during those 2 years, they cost you the compound growth on those contributions for the next 25 years. That is the real cost of waiting for the right time. Not the returns you miss today, the compounding you lose forever. So I want to be honest with you about something. There are situations where waiting, or at least pausing, does actually make sense. And I'd rather tell you that plainly than pretend investing is always the right call for everyone right now. If you have high interest debt, credit cards, high rate loans, do clear those first. The guaranteed return from eliminating 20% interest debt, for example, will almost always beat investment returns. If you do not have an emergency fund, build one before you invest. 3 to 6 months of essential expenses in an easy access account. Without it, any market dip could force you to sell at exactly the wrong moment. If you are investing money you will genuinely need within the next 2 years, keep it as savings instead. The stock market is not a short-term vehicle. But if you have an emergency fund, no high interest debt, and money you can leave invested for 5 years or more, there is no market condition, no headline, no analyst prediction that justifies waiting. The best time to start was always yesterday. The next best time is today. So, is now a good time to start investing? The honest answer is that now is almost always a reasonable time to start investing, if your personal finances are in order. Not because markets are at a particular level, not because the economic outlook is unusually positive, but because time, not timing, is the variable that matters most. Every month you wait, is a month of compound growth you cannot get back. Every year of hesitation is a year the snowball isn't rolling. Markets will always look scary right now. They will always look obvious in hindsight. Your job is not to predict which way they go next. Your job is to be patient enough to let time do what it has always done. If you do want a clear, simple path from where you are now to making your first investment with genuine confidence, the full beginner course from me covers everything step by step, from choosing a platform to opening a stocks and shares ISA, to setting up your monthly contribution so your money works automatically. The link is in the description. If you find this and other videos useful, perhaps subscribe and follow along. Also, drop a comment below. What has been stopping you from starting? Your comments could shape future videos. So until then, see you soon.